Is the hope of a real estate market recovery gone for good? I don't know, you guys. We're going to talk about that today. We're seeing so much different information. Some things are very encouraging, and then some things are not quite as encouraging. So let's get into it. Let's talk about what's going on in the economy as well as what's going on in real estate and specifically here in Phoenix. Thanks for joining me on this Monday. So last week we got the personal consumption expenditure information, which is the Fed's preferred method of measuring inflation. And it showed that prices rose 0.6% during the month of January and 5.4% over the last year. And this marked a turning point in sentiment around inflation expectations and the path forward for interest rates. It was hotter than expected. So basically what's been happening is the Fed has said, we are not joking around. We are going to continue to fight inflation and be aggressive to do so. And markets have been like, yeah, I think things are going just fine. We're going to keep being positive. And finally, this data and the CPI data came out, and the markets, I think, finally got the message that things are not all good. And we are definitely looking at a recession coming up, or at least that's what most people are saying now or reporting on. So markets finally heard that. And what happened was they didn't react very favorably last week. And why do we care about that? Because it affects mortgage interest rates. And so that's also what happened with mortgage rates last week. We saw them go up about 0.25%, according to my sources in the mortgage industry. We also saw applications for mortgages go down about 18%, which we've seen mortgage applications on the rise every week leading up to last week, or the last couple weeks at least. And so the message has been received, basically. Here's another article talking about the federal funds terminal rate, which is where they will basically end once they hike rates at every meeting. So the terminal rate was expected to top out around or below 5%. And now, and many were thinking that the Fed would pause its rate hikes after March and then cut rates later this year. Now, some experts say the Fed may boost the rate as high as 6%, and as it seeks to slash inflation down to the 2% target. So this has been the latest out there. And again, as I said, it is not affecting mortgage rates very favorably. However, and I am not a mortgage lender at all, so keep in mind that my knowledge on this is fairly minimal. But HUD did announce that they're reducing its mortgage insurance premium for FHA loans last week from 0.85% to 0.55% for most borrowers. So again, I don't know all the details of this. Definitely ask your lender. But if you are a first-time home buyer or getting an FHA loan, that's something to ask about, because they're saying it could save home buyers an average of about $800 a year or more. So check in on that. They also made some changes with VA loans as well, making those a little bit more affordable by reducing the funding fee rates for loans that are closed on or after April 7th. So if you're a VA borrower, look into that as well. So just a little tip there for you guys to try to keep things a little bit more affordable if we can. And speaking about affordability, that is not very existent right now. Let's talk about this article from Redfin. Market recovery hampered by high housing costs, low supply in January. So this article is interesting because it talks about how pending home sales have improved slightly, but an ongoing affordability crisis and lack of homes for sale have kept many house hunters on the sidelines. And then it goes on to talk about how new listings hit the second lowest level on record as sellers held on to low rates. So what we have happening here nationally, not just in Phoenix, but the same thing is happening in Phoenix, and we're going to talk about that, is that we have an affordability problem, and we have people that are not interested in going out to buy homes because it is too expensive, whether it be the prices or the interest rates. And then we have a bunch of sellers that are not interested in selling their home, even if they think it would be a nice thing to upsize or downsize, because they have a low interest rate and an affordable payment. And there's a lot of uncertainty out there in the market right now, in the economy, that they're not willing to uproot their lives and probably have something more expensive and not even get the upgrade that they're looking for. So it's kind of this tug of war again between buyers and sellers, just that there's not a whole lot of movement going on. And so as we hear all of this news of recessions and of a housing crash or, predictions of that, or skyrocketing supply or demand falling off a cliff, the reality is right now we just kind of have two parties that are a little bit stagnant. And we've seen this. We saw this back in the fall, a little bit. And now we're kind of seeing this again. We had a little bit of a run at the beginning of the year as rates had dropped a bit and people were excited for a new year, new home. And now it seems like we're kind of losing that momentum again. So I wanted to look at what's going on in Phoenix as it compares to what this article is talking about nationally. So starting with active listing counts. So they're talking about how supply is very low. We're seeing that here in Phoenix too. I mean, it's not at the all-time lows that we saw over the last 2 years of like 5,000 homes on the market, but we're down to 15,000, which is lower than where we peaked last year at 20,000. And this has just been a downward trend since about October of our listings on the market. Since the year started, we've not seen a major increase in active listings to the market. So that's the situation for the sellers. They're not willing to list if they don't have a reason to do so. And so buyers are left with minimal choices. Now on the buy side, of course, we don't have a whole lot of buyers out there right now anyway, because of these interest rates and affordability. But over the last month, we saw some buyers, and I'll tell you, last week, I had 2 clients in a multiple offer situation. I was representing a buyer that was against probably, I don't know the total, but I think it was somewhere between 7 to 10 offers. And then I was listing a home, and we ended up getting about 11 offers on that house. So the buyer activity is still out there. It just depends on the property. It depends on the location. But these interest rate changes have definitely dampened that. So listings under contract is another thing we want to look at, because listings under contract really talks about what our buyer activity is. So you can see these 2 points here. This is a much slower change week to week between the number of listings that went under contract. It still went up a little bit, but it went up at a much slower pace than what we've been seeing since the start of the year. So this is really reflective of that change in interest rates. And I was starting to wonder too, what's going on with prices, as far as like our list pricing and, under contract pricing too, because that information is a little bit more accurate to what the sentiment of the market is rather than closed prices, which are lagging indicators. So I want to share that with you guys, but let's first look at the CMI, because we look at this every week. And if you're new here, I'll explain what that is, but also consider subscribing. I'd love to see you as part of this community. And if you get any value from this video, hit the like button. So the CMI, this is the Cromford Market Index. It is a measure of supply and demand. And if you know anything about economics, supply and demand is kind of the basis for everything. So it helps us understand where the market's heading, generally speaking. So 126, the way the CMI works, anything over 110 is a seller's market. Anything below 90 is a buyer's market. So right now we have demand at 81.9. So that's basically 18% below normal if we have 100 being normal. And then we have our supply at 64.6, which is about 36% below normal, with 100 being normal. So we have lower supply than we have demand, and that is what's pushing this overall number up, putting us into technically a seller's market. And although this is a very, very weak seller's market compared to what we've seen over the last couple years, the Cromford report does say that anything over 120 is a pretty stable place to be as it relates to a seller's market. So at this number, we can anticipate that prices will continue to increase from here. Now, that is a hard thing to think about, as we know the conditions of the market and the volatility, and everything we just talked about with interest rates. But in the short term, if we're looking at list pricing, we're probably going to see a little bit more of an increase when we look, back at the trends. through the last few weeks and maybe in the coming weeks. And then as things change, that might change as well. So we're going to look at all of that, where we stand today and where things have trended over the last month. Let's also look at the CMI by city, because I know many of you love to see this. So every city is listed here, at least the major cities where they're able to gather enough data to produce a CMI. Chandler is leading the pack at 179.1. So that's very much into this seller's market. But then we have 3 cities that are still in a buyer's market: Queen Creek, Maricopa, and Buckeye. All of those are below 90. And then we have Goodyear that is in a balanced market, and Surprise in a balanced market. And then Peoria and above are all technically in sellers markets. So this is looking at the change month over month. So Chandler has increased 21% in favor of sellers, Fountain Hills 6%, and so on. So that's what you're looking at there as far as the percent change goes. Again, this is all really looking at things from a technical standpoint, using this algorithm and the supply and demand factors in each city. So it gives us a general idea on where prices could be headed, as well as how you may want to behave if you are a buyer or seller in any of those markets. So hopefully that's helpful for you. But let's look a little bit deeper at the under contract prices, because like I said, this indicates where prices are heading, but if we wait to see closed prices, they're so lagging. So let's just look at the under contract prices. So I wanted to get this a little bit bigger and really focus in on our current time frame here, but I wasn't really able to do that, or at least see a smaller snapshot. So bear with me here. But if we start at the beginning of the year, which was right around here, 302 average dollar per square foot. As the year started, we saw this under contract price go down a little bit, but over the last month, since the end of January, you can see this little spike here. It's gone back up. So this is really reflecting the mortgage rates that have come down, that sellers have increased their prices as they're listed, or have at least listed at higher prices than they were before, and have gotten under contract at these prices that are a little bit higher. This has kind of been on the uptick. And we can look at the same thing for the average list price per square foot. So this is just the list prices that we've seen continued to tick up since the beginning of the year. So this is really like seller sentiment, right? They're increasing their list prices week over week. And that's, when I say increasing their list prices, I mean as new listings come on the market, that average list price is getting higher and higher, not that sellers are increasing their list price. Hopefully that's clear. But we are seeing this go up consistently, but then in the last couple weeks, we're seeing it kind of flatten out. So again, reflective of what's going on with buyers and the demand in the market. So we'll have to see if this continues to flatten out, if it goes down. And a lot of that's just probably going to depend on interest rates and the buyer demand. So that's what's going on with items that we can track a little bit more real time. Average list prices, under contract prices. And then for sales prices, we can look at the median sales price. I know someone had asked to see this last week, so sharing this again, but this is definitely a lagging indicator. The most recent that we have is from January. 410,000 is the median sales price that we have, and this is clearly a decline from where we were at 475 at the peak of everything. So we're down about 14 or 15% today. But again, I don't know what this looks like for February yet. But hopefully we should be getting this data sooner than later. I also had someone ask if I would share some information on expired listings and canceled listings. So wanted to share where those are at. Expired listings since the beginning of the year has gone up a little bit. This is only accurate up until week 5. So this data isn't super recent. Unfortunately, it's probably about a month behind. And so these are listings that have been on the market but expired, and then canceled listings, same thing. It is only up until week 5 here, and those listings that have canceled just means that they didn't expire, but the seller decided to take them off the market, essentially. So this has been going down. Not super surprising since we've been seeing more demand out there since the start of the year. However, I don't know how recent this is. So hopefully that helps if you were interested in those canceled and expired listing information. But that's where we're at today, you guys. Not super clear, right? Is a recovery a far gone conclusion, or is it still on the table? A lot of it's really just hinging on interest rates and the economy right now. So we'll have to see what happens with all of that. But thank you for joining me today. If you want some more information from me, check the description below. I have some helpful links there if you want an instant home valuation or want to search my MLS. So check all of that out. You can also set up a discovery call if you want to talk with me more about your situation and possibly buying, selling, or investing. So thanks for joining me today. I will see you guys later this week with some more data about the Phoenix real estate market. I'm Caitlin McKegg with the Desert Dreamers team.